Welcome to Passive Intel. Let's hear about the strange event investor Yugen encountered. In January 2026, silver prices skyrocketed. The spot price was clearly listed at $100, but when he took his physical silver to a local coin shop, the owner was only willing to offer $85, or even outright refused to buy. This isn't because silver lost its value, but because when prices fluctuate violently, the supply chain from refineries to dealers becomes paralyzed. To hedge their risks, they can only widen the spread. What's even more ruthless is that this boom and bust, designed to trigger panic selling, was engineered into the system long ago. WikiLeaks once exposed a 1974 government memo. It explicitly stated, after decoupling from the gold standard, a massive paper gold and silver futures market should be established. The core objective is to artificially create extreme volatility to wash out physical metals from retail investors, keeping you away from true safe haven assets. But data doesn't lie. Since 2000, gold's real performance has decisively beaten the S&P 500. Since 1971, the purchasing power of the US dollar has plunged by over 90%. Currently, the US M2 money supply has surpassed a record $22.7 trillion. The essence of rising gold and silver prices is simply the mathematical manifestation of the collapse of fiat currency's purchasing power. Now, top leaders are issuing frantic warnings. At the start of 2026, JP Morgan CEO Jamie Dimon warned, comparing inflation to a skunk at a party, ruining everything and impossible to ignore. He noted that inflation won't cool in 2026, instead, it will slowly rebound. We might be in the most dangerous calm between the first and second waves of inflation. Meanwhile, former Goldman Sachs commodities chief Jeff Currie also warned that a real oil shortage is fast approaching, targeting mid-April 2026. Note a terrifying historical pattern. Before every major market crash since 1987, the 12-month change rate of oil prices reached 100%. Currently, this red line indicator has spiked to 91%. The ultimate catalyst is still to come. To protect supply chains, the White House is considering minimum import prices for critical minerals. What does this mean? If the global silver price is $90, the US government might bid $100 to secure stock. This will force other nations to hike their bids, triggering a global bidding war and continuously raising the floor price of silver. Looking back at the 1970s, silver surged 33 times due to inflation. Today's macro environment, combined with massive monetary expansion, is more severe than back then. So, don't mistake the current calm for the end. When the second wave of inflation truly erupts and paper wealth evaporates, it will be too late to rush for physical gold and silver, for the shelves will already be empty. See through the truth of capital, protect your chips. See you next time. Follow Passive Intel. You sleep soundly, I'll handle the intel.